Welcome back. So today we're looking at an investment thesis for Strive Inc., ticker ASST.
Mm-hmm.
It's arguing that today's drop, about 6.5%, puts it in a prime buy zone.
A contrarian play, basically. And it's leaning pretty heavily on this comparison to MicroStrategy.
Which is a compelling angle. High
Yeah.
stakes.
It is, but that brings us right to our first point of critique.
Okay, let's dive in.
The connection between the stock's immediate technical floor and that whole MicroStrategy parallel. It really needs to be fundamentally strengthened.
Right. So the thesis calls ASST a Bitcoin treasury play, just like MicroStrategy.
Exactly. But the justification for this idea of smart money accumulation, it's all based on the chart.
Purely on that consolidation we're seeing between, 96 and 98 cents?
Yes, and that's the core weakness right there. You're using technical analysis alone to anchor this really profound fundamental claim.
It feels a little thin, doesn't it?
It does. I mean, if this is truly an institutional accumulation zone, you're going to need more than just a chart pattern to prove it.
You need some fundamental justification.
You need to integrate real corporate data to actually anchor that comparison.
So what's a concrete way to do that, to make that link feel solid for the reader?
Well, for one, you could analyze Strive's actual Bitcoin to market cap ratio.
Okay.
But don't just give the number. Compare it. Show us where AST is today versus where, say, MicroStrategy was in its own early accumulation phase. Back when it was a $10 or $20 stock.
That would be a powerful comparison.
Or reference recent 8K filings, anything that confirms the Treasury strategy. You need to bolster the fundamental why to justify why this specific pullback should get institutional attention.
Okay, so that solidifies the root of the thesis, but then we get to the price targets, and, this is where things get a bit wild.
A bit, yeah.
The extreme disparity in the projected upside targets kind of undermines the credibility of the immediate technical rationale.
It really does. I mean, you have this very tightly defined short-term target, an immediate, 14% return to retest the 112 high?
Very tactical, very technical.
Right. But then, in the very next breath, you're talking about the 52-week high of $13 plus?
It's a massive jump.
And that's the weakness. It's such a jar in contrast. My brain almost shuts off, You've got this strict stop loss just below 95 cents, but then this aspirational $13 target feels completely detached.
There's no narrative bridge.
None. The reader is left wondering, how on earth do we get from here to there?
So the suggestion then has to be building that bridge.
You have to. Segment the investment thesis into defined phases. You need to give the reader milestones to connect that 98-cent floor to the $13 ceiling.
So a phase 1 would be?
Define phase 1 clearly as the technical retest. You're targeting 112, or maybe the previous close of 105. It's grounded in the now.
And then you explicitly outline the catalyst needed to get to the next stage?
Exactly. What unlocks phase 2? Is it a major Bitcoin treasury announcement? Is it a confirmed sustained break above 105 on heavy volume?
Something verifiable.
Yes. You need to show the reader the flight path, not just the final destination.
Okay, so to wrap this up, 2 core areas to really strengthen what is, I think, a really interesting contrarian idea. First, focus on strengthening that fundamental link.
Right.
Connect the technical accumulation to the Bitcoin treasury plate thesis by using real corporate specifics.
And second,
Clarify that phased approach to your price targets.
distinguish the immediate retest from the aspirational high.
And define the catalysts that unlock that next level of potential. Implement those changes and you'll give your thesis deeper roots and a much clearer flight plan. We'd love to see the improved work. Thank you for sharing it with us.